Corona, a form of virus, is spreading in China's Wuhan district. 2 million people now have corona. Cities are locked down, no one is allowed to go out. Businesses are at a risk of closing. Stock market is crashing. It is the biggest crash since a decade of S&P bull run. Highest unemployment rate in the history of United States of America. More than 3 million people filed unemployment in 1 week. Government has printed $2 trillion to support economy. Various relief packages have been rolled out in every country across the world. To prevent stock market to crash further, restrictions has been posed on short selling. China has contained corona in its district and is sending help to Italy to fight the disease. Number of cases in the world are increasing drastically. America has to take actions to prevent the spread of the disease. S&P has gained 30% of its loss in 1 week. People are scared and in disarray. Unemployment is at its highest since the last greatest depression after World War II. S&P has recovered all its losses. Nasdaq sets new all-time high, leading the stock market.
One theory to explain this bizarre behavior of stock market is ban on short selling and normal people like us buying stocks because they are at 50% discount, irrespective of whether the company will survive this pandemic or not, which has caused a ripple effect of people buying shares, stock prices going up, attracting more people to enter the stock market due to the fear of missing out, making stock prices go even further up. Institutional investors who were sitting at the sidelines looking for an opportunity to short the stocks can't do it anymore and are getting impatient and pressurized by their clients why they are not getting a piece of that profit. So institutional investors are forced to enter the market to buy more shares, which not only made stocks recover all their losses, however led to all-time highs.
Businesses are opening slowly in some parts of the world. Is the new all-time highs result of people reacting positively to businesses being open slowly? Are we too optimistic or delusional of everything will come back to normal eventually, automatically? What will happen to the huge amount that has been printed and given to companies as a loan? Are we prepared for the next wave of pandemic? Will there be a vaccine before second wave of pandemic hits the world? How the world be once the worst is over, if it is over? Will we witness another market crash bigger than what we have seen before? Are we in an illusion of what goes down always come up?
There is no simple answer to the situation. One thing is certain, government has printed so much money that it will bear its toll on economy. One theory is the increase in inflation. Inflation can help reduce the loan given to the companies and governments by decreasing the underlying value of the currency.
To help recover economy, government plans to print even more money and lend it at lower interest rate. People being hired back, economy turning back to normal, low interest rate, easy and cheap money to be borrowed by the people. People getting paid in the form of bailout packages without working for it. Reduced expenses due to lockdown and sitting at home. People are now spending less and saving more due to the uncertainty of the situation.
All this leaves people with more money at hand once the situation gets back to normal. More money with people once everything stabilizes means more demand for products industry has to offer. Increased demand and less supply will trigger increase in products price and finally over the period of time increases inflation. There are many factors that can trigger an increase in inflation and it's one of the factors that can trigger it. Rise in inflation is imminent, but by what percentage? Will Feds do anything to control inflation? After printing trillions of dollars out of thin air, can they even control inflation once things get back to normal? A financial system controlled by government, it seems possible, but it's easier said than done. Japan's lost decade is a perfect example of catastrophe we can enter into. After huge inflation and unrealistic valuation of stocks, when this bubble will burst, we can go into the longest deflation of our history. Triggered by a collapse of land and stock prices, companies becoming insolvent, a state when their assets worth less than their liabilities. Population may react by spending less, which will create a negative impact on aggregate demand, which will in turn boost deflationary pressure, hence encouraging people to hoard even more money, which will result in a deflationary spiral.